From today, it may be possible for you to buy a house without actually having a deposit. So, yes, we have the launch of no deposit or 100% mortgages. It's definitely true that things come around in circles because these were around when I first got into mortgages, and here they are again. They work a little bit differently now than they did then. And what I want to do today is just run through, explain exactly how it works, the pros and cons, and so you can see whether you'd be eligible for this as it stands. And we're going to do that right now. So 100% mortgages, in a nutshell, it means you can buy a house without a deposit. So that if you're going to be purchasing a property, let's say that's worth £200,000, it means they will lend you £200,000, so you don't have to find anything in between. So what I want to do is just explain how these work. Now, right now, there's only one lender that will offer this. So that comes with pros and cons on its own, and I'll go through that in a second. Just before I go into anything, and just to keep our compliance team happy, this is our risk warnings, and exciting, I know. So think carefully about securing other debts against your home, and your home or property may be repossessed if you do not keep up repayments on your mortgage. So that's out of the way. So no deposit mortgages means you can purchase a property without having to save any money for a deposit, because when you are renting, it is almost impossible to save. And at last, a mortgage lender has realized that and done something about it. So here we go. Right. So this is only available with one lender right now. So the eligibility, you have to be a first-time buyer. If you've bought a property before, you've currently owned or you currently own a property, you do not have this option. You have to be at least 21 or above, and you have to have at least or less than 5% purchase price. Why? Because if you've got 5%, then there's probably better options, better rates. There's other things you can consider. If you have less than 5% right now, you've only got one option, and you can't have had any missed payments within the last 6 months. Now, that sounds quite broad. You do still have to have a fairly decent credit score for this to actually work, but that's the official criteria. Again, so you can't be borrowing any more than £600,000. Who would want to be? And there's something called household to household criteria. First time I've said that out loud, obviously can't do it. I'll explain what that means in a second. That's quite important for how this works. This will not work if you're looking to buy a new build flat. You still need to have a deposit for that one, and you have to have proof of your last 12 months rental payments. Now, there is some criteria around this. It does need to be either through a letting agent or bank statements. If you're paying in cash, there's sometimes ways around that. Have a chat, let us know, and we can tell you what we can use. And you have to have some household bills experience as well. So in other words, if you're renting the house and you're also paying the bills, and you've been doing that for the last 12 months or within the last 18 months, then this may be something you can look at, okay? So pros of 100% mortgages, you don't need a deposit. I think I may have mentioned that already. There's no competition, and that's sometimes a good thing, sometimes a bad thing. It's probably more bad than good. It does obviously allow first-time buyers to enter the property market sooner, hopefully turns generation rent into generation buy, because obviously there's some really silly rental rates around at the minute. And it can improve your credit score, because having a mortgage on your credit file and making sure that you can pay the monthly payments generally will improve your credit score over time. So what's the cons? Well, you've got to borrow the full amount. So obviously there's going to be a higher monthly payment, because obviously if you put a deposit down, you're not going to be borrowing as much. Negative equity. What is negative equity? Simply, if you bought a property for £200,000 and you're now borrowing £200,000, and then for whatever reason, the property then becomes worth £190,000, you owe £10,000 more than what the property is worth. That's called negative equity. Obviously, the risks of that increase the more you borrow against the property. Stricter eligibility requirements compared to other mortgage products. There is literally one lender in this. It is not a huge lender that's doing this. It is a smallish building society that's doing it. They will receive hundreds, probably thousands of applications for this in a very short space of time. And at some point, they're going to have to pause applications. There's no doubt that that will happen. They'll probably come back into the market. And the good thing is, if other lenders can see them doing this and can see that there's good business to be written, you'll probably see other lenders entering the market at some point too. But initially, for this initial run, we're expecting it to be pretty limited. And there's obviously potential for higher fees and charges because there's only one lender. As it is at the moment, the product they've got isn't actually a bad product. That there isn't really any fees. That's right now. That could change if and when you come to look at this. Household to household criteria. So in a nutshell, this is your household needs to look similar to what it does now when you buy the house. So for example, if you're paying £750 a month in rent at the minute, then your mortgage payment can be no more than £750. So you need to make sure that or lenders are basically using this as a sort of a conduct exercise to say, right, well, hang on, if they really can pay £750 a month and they're not missing a payment, then why can't they be paying that into a mortgage? So if they then give you a mortgage payment of more than that, that's harder to prove. So household needs to look the same. If you're going to be jumping, let's say, from an A-band council tax up to the highest rate possible, and suddenly your council tax goes from £100 to, I don't know, £300 a month, that's going to be harder to explain or harder to demonstrate that you can do it. So basically, household to household, in a nutshell, is your financial outgoings need to look similar or better than when you've purchased the house than what they do now. And again, they haven't actually received their first application on this yet. So I would imagine the rules for that will either change or clarify more as we go through. But that's it in a nutshell. Now, there's other options than 100%. This all involves saving in some way, shape, or form. So help to buy equity loans are out there. If you are looking to purchase a new build property, you still need at least 5% for that. Shared ownership schemes, generally, you still need 5% deposit for those as well. There's obviously, you can save for a larger deposit. If you get at least a 5% deposit, then more mortgages will come into play. You won't actually need to worry about this. And obviously, you've got the bank of mum and dad if they're looking to allow you to sort of raise a little bit of money with them as well. Again, we put this risk statement in here as well. But in a nutshell, what we're doing here is we are using your rental income that you're paying right now and using that to work out how much you can borrow. So as long as you are borrowing within your budget of what you're already paying and can prove what you're already paying, then as a general rule, this is something you may want to consider. As ever, if you need any professional advice, these are the types of things that we offer. And for now, that's all I really wanted to go through, just a little bit of a highlight of what's out. This is brand new today. And like I said, I don't expect this to be around for long, but hopefully it's a change in the market and we'll see new lenders and new criteria come into play so we can change this generation rent into generation buy. Any questions, pop them in the comment and I'll see you soon.